All right, we are live.
We are live.
Welcome to the show. Welcome to the show. Thanks, Diane, for joining me on this my first Zoom interview. Wow, look at that.
Well, I'm honored. Thank you very much for having me.
So, Diane, my hope in this interview is just to kind of touch base with you, go through a couple of questions that I think are in the minds of a lot of people out there. Just get a sense for what your world looks like. We can go back and forth. We don't have to stay to the script, but maybe just start with giving us all kind of an introduction to who you are, where you work, what you do, and a quick little summary of your history.
Okay, so currently own a mortgage company, have been in the business about 18 years. We're licensed in both Massachusetts and New Hampshire, so we cover both states. We offer a full gamut of products, except for the rehab loan. We stopped doing that a couple of years ago. I was a VP of HR and operations prior to that for 24 years and just got tired of the corporate world. So when I left that, my husband was actually in the mortgage world and I started helping him and realized I can do this. So I left working with him and started, after 5 years working for someone else, I decided to start my own shop, and here we are.
Cool.
Yeah.
So take me, let's just start with this question. Let's go back to January 1st, 2020, right?
Okay. Mm-hmm.
Pre-COVID-19, you're kind of looking down the tracks, and you're kind of making predictions of where you think things are going to go. So start with January 1st, 2020. What's your projection of where we're at with things?
Well, typically January and February are slow for us, which really kind of works for me because I'm a snowmobiler, but it wasn't slow this year. It was pretty good. But my prediction was that we were going to have another spring with the frenzy that we saw last year, mm-hmm. with people overbidding for houses because there was still the issue of nothing on the market, nothing that was decent on the market. So people are overbidding and things like that. So I thought that this spring was going to be exactly like that, and our bucket would be full of purchases. Yeah. I have 18 loans in the pipeline right now, and 3 are purchases. So there you go.
Okay, so if you have 3 purchases, the other ones are just refis, straight up refis, right?
Correct.
Okay,
yeah.
So one of the questions from the group was, is this a good time to refi? And if it is, why? If it isn't, why not?
It is for 2 reasons. Rates are fabulous, and values are there. 3, 4, 6 months from now, we don't know where values are going to be. We don't know what this is going to do to the market, this COVID-19. And when I say that, it's because if people that are having a tough time financially start missing their mortgage payments, mm-hmm. and the government does start the process of foreclosure, there will be some values dropping for sure. If an appraisal is done 6 months from now or 3 months from now, whenever we get out of this thing, and there's a foreclosure in the mix, that gets brought into the value equation. Yeah. So it's going to bring the values down. So as important as rates are right now, so isn't the value, and everybody's value is up.
What's this that I've heard from some lenders that even though the rates are down, the lenders like yourself are so buried that, and I don't know if this is on an individual level or collective level, but that they've been trying to kind of slow the pipeline. Is that an accurate statement?
It sure is. So a couple of weeks ago in midweek, we saw rates go from whatever they were that day. Let's just grab a rate at 3.5. And all of a sudden they went up to 4.25 within an hour. Yeah. It was to stop everybody being mortgage brokers from locking loans because the volume was so large. It was detrimental to them. They just couldn't keep up. So
who drives that rate? Who are the shot callers that create that? scenario?
The lenders actually give us our rates. So
Okay.
if I have 12 lenders in my portfolio and they all shot up to that at the same time, something was going on across the country.
Yeah.
So everybody stopped and said, what are we doing here? And then all of a sudden, so that went on that afternoon and the next day, and then they started coming down again. We saw that again. We never saw that kind of a jump, but we're seeing on a daily basis. They'll come out 2 or 3 times a day now with different rates.
Okay.
And I think that's driven by the market. I don't think that's driven by them trying to control the volume that's coming through their pipeline.
Right. So I'm putting together my list of questions, and my daughter walked into the room. And so I asked my 15-year-old daughter, I said, if you could ask a mortgage broker any question today, what would you ask her? And her answer was, what's a mortgage broker? I said, good question. Let me ask. So, Diane, what is a mortgage broker?
A mortgage broker is an expert at brokering mortgages, basically. We are the middleman for many clients that come to us that want to do either a refi or a purchase. We specialize in mortgages. So I know your next question is probably going to be, why would someone come to me versus a bank?
Yeah.
2 reasons. One, we are the expert at mortgages. All we do is mortgages. We know every mortgage inside and out. A bank offers mortgages so that you don't take your business out of their bank and go somewhere else.
Okay.
So they want to keep you as a customer, so they're going to offer a mortgage. I shouldn't say always, but typically we can beat a bank's rate every day of the week.
Okay.
And we certainly can beat their customer service because we want your business for life. We just don't want it once. And I do have quite a following.
So if beating them on rates is an advantage, what might be an honest disadvantage to not working with
using a mortgage broker
or a bank? Just having the loan, having all your banking under one house.
Yeah, I guess if that's something, but your mortgage is going to get sold anyway, no matter if they use me or a bank.
Yeah.
So you're probably going to be paying someone else that mortgage payment on a monthly basis.
What are you seeing right now in your world? Like, what are your challenges like today? Like, what's the challenge of the week? The
challenge of the week is appraisals. Getting them done, because there are a lot less appraisers out there in the marketplace right now. They don't want to enter someone's home, so they're just on hold. And they've pulled out of the business just waiting for this to clear. You can't blame them. So our process is this, and these are Fannie Mae guidelines that just came out this week. Basically, we have to go on the portal for the appraisal management company, and we have to order a full appraisal, period. Whether it can be done or not, a full appraisal has to be ordered. So let's just take a refinance for a moment. An appraiser has to call the client, the owner of the home, and say, I need to come in and see your house. The client could say, well, I don't want you in my house. So I realize I'm doing a refinance, but isn't there any other way to do this? I really would prefer you not walking through my home. So that being said, they let the appraisal management company know, and then they come back to us and say, okay, your next option is to do a desktop appraisal. The cost is the same, the turn time's the same. We can get it done in whatever period of time they quote us. So my thought is, why are we wasting time with that first whole phone call and losing a whole week in an already damaged process? Let's just skip to the desktop. But that would be me taking on Fannie Mae, and probably not going to win that battle. So
yeah, and so having a desktop appraisal, the appraiser never gets into the house, never sees all of if there are beneficial fit and finishes in the property. That seller could be leaving value on the table just because of that, right?
Yes, they could be.
Yes.
Haven't had any come in as an issue yet. They're all appraising.
Yeah.
had a purchase not appraised last week in Massachusetts, but the borrower bid $30,000, $30,000 over the sales price.
Yeah.
And it came in at the sales price. So.
What about what other challenges, like when you had mentioned the other day when we spoke that the compliance review and the buyer, the underwriter wants the buyer to confirm that they have a job, that they're getting.
Yes, so there's two other Fannie guidelines that have just come to play. And one is they want asset statements dated within a 30 to 60 day window. So if we started a process in the end of March, maybe, and the buyer doesn't want to close till May, we've got a window there that we'll have to go back to them and ask for updated asset statements to make sure they have the money still in the bank to be able to do that. And then the second piece is first they asked for a direct number and name of someone that they could do a verification of employment with within 3 days of closing.
Yeah.
Because people are losing their jobs. So we got them all, we scurried around, got them all that, and then Fannie changed the rule to, no, we want an updated pay stub within 3 days of closing. Okay. So I literally had 2 clients driving to their refi on Monday this week when that one came out. And here they are thinking everything's all set. And I'm texting them saying, I need another pay stub each. They were very understandable, which most people are because of COVID-19, but that makes me crazy.
Yeah.
Yeah.
What else are you seeing out there? Any other challenges that you can speak to?
Just, the lack of property coming on the market is going to slow down the purchase market for sure.
Yeah.
And that's pretty much it. The appraisal thing is the biggest, and rules changing the last minute, like these two. That's just, if we give a clear to close, it should be clear to close. My word is my bond, and I'm not going to give a clear to close and then have a lender come back and say, oh, we changed the rules now, we want this. It just makes me nuts. They have to stand by at some point they have to stand by their product.
Right. But that's part of the whole machine. So good luck getting that to happen, right?
I know. Yeah.
There's something. So we talked about credit. Oh, so here's a question for you. We talked about credit the other day, but we also talked about, are you aware of any government programs that are allowing sellers are there any forbearance programs or terms and conditions that you're hearing coming down?
I look all the time and I really haven't found anything yet. So how is this going to play out? So if someone misses a mortgage payment, so Bank of America, for instance, said they were going to put, if someone misses a mortgage payment to them, they're going to put that on the back end of the mortgage and just let them slide. Mm-hmm. Then we heard they were going to do interest only on the principal balance that's out there. They'll require just that. So it's hard to say. I think if people are going to miss a mortgage payment, they should call their current lender and ask them, listen, this is what's going to happen. I'm going to miss May 1's payment. What can I do? And find out if there's anything for them directly. Bite it in the bud. The worst thing to do is just let it hang out there.
And I think probably to the next question about credit is the uncertainty of whether or not that missed payment, whether it be a mortgage payment or a car loan, whatever it is, if that's going to go to credit. And I think what concerns me is that while the government's trying to do and start a lot of programs, and there's kind of like this feeling in the wind that like, oh, well, we'll blame it on COVID-19. And if we miss a payment, it won't be the end of the world. Someone will figure out something where I won't get dinged on my credit. And I think that's a scary place to be operating.
Absolutely.
Because you had said the other day how important credit is still, if not even more so today, correct?
Right. Credit is everything. It'll follow you around it will cost you money or it will make you money. I mean, if you have a good credit score, keep your good credit score. You didn't get there overnight. And unfortunately, in the United States, it takes 2 seconds to drop your credit.
Yep.
And months to bring it back up.
Yep.
So, yeah.
Where are mortgage rates today?
Today we're at 3.375 for a 30-year fixed. No points, no prepayment penalties. APR is like 3.523 on that. And then I think the 15 years at 2.99. Again, no points, no prepayment penalties, and APR is about 3.118 on that one. So they're pretty good. They're very good. I'm kind of seeing a trend that Thursdays and Fridays, for whatever reason, we're seeing, we're ending the weeks with really good rates.
Okay.
So.
So on the group chat, I threw out a request for people to throw in their questions, and I don't think you do a lot of new construction lending, but we'll beat this around for a second. So Sebastien asked, I'm in the process of building a house, so these would be my questions. What do you recommend to protect a buyer in this environment? We are worried that housing market would crash while we're building a house, and we would not be getting a house fairly valued at the time of closing.
Right, good concern. So I would make sure in your contract, Sebastien, that it says that. So in a new construction, they're going to do 2 appraisals. They're going to do one up front to say this is what the projected value is after construction, and then at the end they're going to do a final inspection to make sure that everything was done. In a market like we're in, that could change, but I would make sure your contract states that the end product needs to appraise at or above that said value for that to go forward, or you can renegotiate the sales price.
Yeah, I would agree with that. So his comment was, my lender suggested that we ask for the contract to be subject to a home appraising at or above the base price of the home being built, but not counting any upgrades.
Right.
So normally with the new construction, the upgrades, those are out-of-pocket cash items.
Right.
That you don't. I mean, they may factor into an appraisal, but at the end of the day, if the builder's going to end up having to take the house back, they're going to likely going to want to be covered for any of those upgrades. So,
correct. Right.
So what do you, Diane, what do you think of the COVID-19 addendum? Is it being used and accepted? Have you seen any kickbacks from underwriters with this addendum?
Which addendum are you referring to? There's been a couple.
So there's the one that I'm familiar with basically says there's a couple different options, but essentially says that if the buyer has a situation where they lose their job or their ability to fund the purchase of the house, as it relates directly to like a loss of employment due to like a COVID-19 situation, it depending upon what's checked in that addendum, either the parties can renegotiate or the buyer can basically say, I'm sorry, but I back out. And then they would get their deposits back and the house would go back on the market. I think what I'm seeing that's pretty kind of standard with every offer that I'm seeing coming down the line. And I personally haven't seen any pushback on it. If I'm representing the sellers, I'm not super crazy about seeing that addendum because it gives the buyer an out right up to potentially till the day of closing.
Right.
So that's my potential. I mean, if I'm representing the buyer, then obviously I want to protect their interests, and I would have that in there.
And I hear you, and you're the expert on that end of this, but I guess it's the right thing to do. If a buyer lost their job, they're not going to get the loan anyway. Right. So we had one today. I was literally locking it in, and she called and said, I just got furloughed, so you need to stop. And that was it. So we can postpone that if she can make that happen, but the seller has to be ready to do that. But I guess, at the bottom, at the end of the day, that's the right thing to do. And if someone doesn't have a job, that's why we're doing a verification within 3 days of closing, to make sure they are still employed. And I would think the seller would want to find out that information if the person was going to bail up front versus within 3 days of the closing table.
Right. He also asked, do you see rates going up and getting a mortgage becoming more difficult?
Okay, so I don't see rates going up. It's just my professional opinion. I think that they're going to stay like they are, as long as we can possibly make them stay that way.
Yeah.
I think Trump is doing a good job of keeping that down and keeping the housing market moving like it is.
Mm-hmm.
And what was the second part of that?
Do you think mortgages will be harder to get?
Yes, I do. Yeah. Think about it. I mean, as mad as I get at Fannie Mae about all these last minute changes, the risk down the road of people not being able to pay their mortgages because they didn't have a job, or
right.
I mean, 25% of small businesses are going to go out of business within a 2-month period. That's a statistic. Can you imagine how many people work there and they're not going to have that job? So yeah, I do see them definitely getting more stringent and more difficult to get.
I saw banks being very slow as it relates specifically to new construction. I saw banks being very slow to come back into the new construction financing arena. And
yes.
What I thought was interesting is that you had said the other day that you had heard of some lenders who were pulling out of the new construction financing. I'm having a flashback to 2008 where, 8 or 9, when the market crashed, right? And banks were holding these half-finished houses. It was hard enough to sell a house that someone had lived in that was completely finished, but now they're selling these half-built houses, and the values are plummeting.
Yep.
The buyers are pulling the parachutes, walking away or running away, and they're the bank's stuck with these houses. Yeah,
and it's half built. I mean, so yeah, we had a nice construction program up until about, I don't know, it was about 3 weeks ago, and our lender that did them said, no more, we're done.
Yeah.
And then one day it disappears, it's gone.
Yeah.
It's like, oh boy.
Yeah, so he had asked if it's a good time to build a house, and I think there's a fair amount of uncertainty. I think you have to be really careful about what your contract says and how much money you're willing to put out onto the table. I think there's a lot of details in being able to answer that question that I don't have the full picture of to be able to say yes or no. I do think the lack of inventory, the new construction has helped to fill that hole where the lack of inventory is. So I do see builders, short of the COVID-19 issue, I think they were doing well and they were starting to rebound. And they were starting to see positive numbers. I know that the cost to build right now is it's very high, but it is what it is. I mean, everything's high right now. So.
Right. But those houses, do you agree that those houses, the new construction homes are selling?
Oh, yeah.
Or pre-COVID-19, they were selling. I mean, there's 5 on my street, brand new, big homes. They've got to be 4-bedroom homes. They're all sold. They're beautiful.
Yeah. You do an inventory list where there's, normally, I don't know, 25, 30 houses on the market. You might see 13. And out of those 13, 3 are active, and the rest of them are under contract. And I'm talking like not just new construction, but total, resales, new included.
Right.
So, let's see here. So if someone can't make their mortgage payment, we talked a little bit about this in the beginning, but we talked about contacting your servicing company, right? Contact your lender.
Yeah.
I would if someone's in that situation, and again, I'm going back to the devil's in the details, and I don't even know if this would help, but I would be a proponent of making sure that you have like a really clear list of people who you talk to, what you talked about, when you talked to them, their name and extension number. Because if this thing snowballs and people start losing, their houses and all that, those conversations are gonna, well, you talk to Joe one day, next day you're talking to Sally, and then Pam, and then Brian, and you're just a number, right?
Yes, absolutely. And that's very good advice, because you'll be starting over with every new person you talk to with the whole story, and you'll never have any leverage if you don't get it in writing. So another, a good thing to do also is ask them to shoot you an email with their decision, or so you have something, because we don't know where this is going to go. We don't know how it's going to end up, or what each lender, every lender might do their own process to make this happen. Look at loan modifications back in '08. Everybody thought that was going to be, the rescue. It was a disaster. I mean, people even put in for loan modifications and still had their houses taken away. So I would definitely, if I was in that situation, I would get person's name I spoke to, their phone number, the day and date I spoke to them. I would keep a full documentation of what the process was as I move forward, and try to get anything.
Their extension number, their ID number, whatever. Because of course they want all the information from you, but they're not too forthcoming with who they are and
with what they've done. Right.
Yeah. All right. Well, let's see here. What else we got? So Paul had asked. He's thinking about subdividing his land. He's got some, I think, like 30 acres of land. I don't know that you necessarily get into land loans per se, but I'll speak to that for a minute.
Okay.
I mean, I'm always a proponent of considering leveraging the potential highest and best use of any asset you have, and you can take a large piece of land, say it's 30 acres, and carve off a lot, and keep it. Basically, all you've done is drawn lines on the paper. You've gone through the formality of subdividing it and recognizing that with the town. That way, if you do have to sell that property and free up some capital, that may be an option, provided that there's a market for it. The other thing is that you can speak to this as well, but like when you buy a house with a large amount of excess acreage, they typically don't give you a whole ton of extra value for that acreage. So as a landowner, you can carve off lots, you can leave them in current use to maintain the tax benefit, and then you have that potential investment in your back pocket down the road. So, I guess every situation's, go ahead.
Yeah, well, you need 10 acres to be in current use, correct?
Correct, at least, yep.
Yeah, so, and Fannie Mae doesn't lend on land, she lends on residential buildings. So when we have a house with excessive acreage, they typically stop giving value over 10 acres.
Right. And so another thing to keep in mind too is that if you have a house with excess land and you have a mortgage and you go to subdivide, they probably would not require a lien release to do a subdivision. I think that could be done and everything kept in continuity. But if the lot is sold, then they would want a lien release.
Yes, on that piece. Yes.
Right. Yeah.
I would think so.
Yeah. What else do you got out there, Diane? What else do you want to talk about?
Busy. We're busy. I'm grateful to be so busy right now. I'm talking to people that have lost their jobs, or they're on furlough or whatever. I just keep thinking, thank goodness we're as busy as we are. We're literally 16 hours a day right now. I emailed my team at 11 o'clock last Saturday night, and they answered me. It's like, what are you guys doing? You shouldn't be working. And they're like, well, you are. So it's just busy, and we're grateful for that, because we don't know when this market does die. If and when it does die, it will happen overnight. So, just our thought is, our mission right now is to just keep moving forward, close every loan we can, help everybody we can. Doing all these refis, if we're saving somebody $200-300 a month, that's huge. That's going to help them in this COVID-19 mess that we're in as we move forward. So, as well as me making money, they're saving money. So that's a good thing.
Yeah.
So that's what we're doing. We're just trying to keep the best attitude we can and keep going forward.
We have long since been using technology to telecommute and send electronic documents and all that stuff. So that, my guess is, your world hasn't really been flipped upside down with regards to remote working and stuff like that. Is that a fair statement?
Correct. My world hasn't. The end result, obviously, of all my work is the closing. Yeah. And New Hampshire, Massachusetts can do, I believe they do electronic closings. New Hampshire has never passed that law. So they're doing curbside closings. So the process is basically, they send you your closing documents a couple of days in advance so you can review them. Mm-hmm. You walk through them, write all your questions down. You can either email your questions to the title company in advance, or you can ask them when you get there. You stay in your vehicle. You call and say, I'm here. I'm in the parking lot in my designated spot. They come out. They take your license, bring it inside, make a copy of it, give it back to you, and then hand you the documents that need to be notarized and take care of it from that point of view. And they're very well protected with masks and gloves. So yeah. That's how it's, curbside closings. And so far it's going pretty well. So I can't knock it.
Adapt, modify, and overcome, right?
Yeah. I mean, you have to think out of the box. You have to do everything you can do to get around these issues.
Right.
So we're sharpening our pencil.
All right. You ready to play a little prediction?
Okay.
Let's go to the prediction corner for a second.
Okay.
All right. What is your prediction for the one's ability to buy or sell 6 months from now?
Well, I'm hoping it's going to still be like it is right now, but it's all going to depend on how long COVID keeps going. I think if we come out of it in the next couple of months, it's going to take people a little time. I mean, people aren't going to run out there and have a party. I think they're going to be a little more cautious. They asked one of Trump's, the doctors that stand behind Trump on CNN, they asked him, when will we be back to normal? And he said, never. The world will not be like it was. People will be more cautious. So 6 months from now, I'm hoping is going to be like it is right now. It's just hard to say. It really is what's going to happen.
Same for maybe a year out, maybe a little bit more normalized, but still uncertain.
Yeah, uncertain, but I think it will have bounced back by then.
Yeah. And
then hopefully we'll be, if the values continue to stay up, it'll be okay.
All right. If someone wants to get in touch with you, what's the best way for them to reach you?
They can reach me by phone number, which is 603-930-5706, or certainly email. My website is nebrm.com. All my information's on there. Cool. And I'm always happy to help.
Awesome. Diane, thank you. Thank you. This was fun. I appreciate
Thank you, Dad.
I appreciate you.
Yeah, it was great.
The pipe. Gonna